Earlier in the week, we were looking to see if Ethereum would hold this double bottom or would fall through our volume profile gap we highlighted in yellow. The areas that I had marked off were from a volume profile going back to 2023, as I wanted to look at the volume where ETH was trading in the 3000s over a long period of time. What I failed to take a look at was the volume profile from the most recent run-up from the April lows, where ETH fell below $1,400. When looking this way, we can see a node which is highlighted by the blue band. This area seems to be holding for now, and we need to be aware of that. Taking a look at the 4-hour, we have a couple new red zones created since our last video on Sunday night. We also have a channel here as well, shown in light blue. The latest touch of this channel is very interesting. The initial red candle that created the new low, and also the new red zone, was quickly engulfed by the following green candle. With such an immediate reaction, we see similarities to a double bottom, which is signaling that the market may want to reverse here. This is very early, but is one thing the bulls can be positive about. The 4-hour chart will look more bullish if this channel is broken to the upside, as well as breaking these red zones with closing candles above the zone. Of course, the creation of a green zone would be positive as well. Now I want to take a close look at the 15-minute chart because there were some very nice trade opportunities on this time frame. In the last video, you could see this first trade setup almost being complete, but let's revisit it as well as another trade that was almost identical. The first thing to note is that the price had a sharp sell-off, followed by a double bottom. As that double bottom was being created, a large amount of trading concentrated around a specific price band shown in blue, creating a point of control. This is showing that after the drop, there is a large amount of accumulation taking place. Once the trend line is broken, while above this price band, price quickly appreciates, moving to the orange line. This orange line is a point of control from the 4-hour time frame. As mentioned many times before, these points of controls act like magnets, so price returned to this area. From here, we had a very small channel shown in light blue that turned into a double top after the channel broke. Remember that the orange line is a point of control, so these two bearish signals at that price were indications that the bears would soon take control of the market. This new movement down has a lot of similarities with the first move down: a sharp sell-off, creating a red zone with another sharp sell-off, then a double bottom with a point of control being used as a launch point to get back to the orange line. I guess I should also mention that both had distinct horizontal channels marked in yellow, but the first one is more prevalent when using Heineken-Ashi candles. If you look closely, you can also see that both, after breaking out, did a very quick retest of the point of control before blasting off higher as well. That is 3 nice trades there, 2 bullish and 1 bearish. Fast forwarding a bit to Tuesday afternoon, price stayed below the orange line or the 4-hour point of control. Remember that the daily we are bearish with red zones, the 4-hour also bearish with red zones. Under the 4-hour point of control, we are automatically looking for shorts. Creations of red zones gave us an opportunity to get short. A red zone got created, and price went into the zone, but never broke the zone. If we take a look at a small point of control from the top, we can see price rejecting just under it. Further signal that a sell-off may occur. Price went down to the point of control where the previous long trade started from. After a rally, price created 2 double tops back in the second red zone. A very large sell-off ensued after that. Price has since rebounded strongly, so it will be interesting to see if Ethereum can reclaim above the orange line and start breaking the red zones on the higher time frames. Continued downside is also not out of the question. The current trend is still very much bearish, even when we continue to find new signs of life or optimism that the bottom is indeed in, once and for all.